This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Marius Ghenea of 3TS Capital. Marius, thank you for joining us.
It's a pleasure being on your podcast.
Great. Can you tell us a little bit about how you got into venture capital investing? What road led you there?
Well, I started as an entrepreneur some 25 years ago, right here in Bucharest in the southeastern Europe. Became a serial entrepreneur over time by developing my first company and making my first exit, then the next company and my second exit, with activity in 7-8 countries in the region. And then about 10 years later, I turned to becoming a business angel investor. So I started investing in entrepreneurial startups in the region. It was a time when I noticed that there was really interesting activity in this part of Europe, particularly in tech startups. And so I wanted to help out and also to get returns out of investing together with founders, entrepreneurs. And that was for another, say, 7-8 years of my professional life. And then it was some 4 years ago when I realized that my serial entrepreneurship track record and then my business angel investment track record and all the activity I've done so far would be a good match or have a good continuation by me joining the private equity ecosystem. So I decided obviously to still stay in this more early stage with venture capital and growth investments. And this is why I partnered with 3TS Capital Partners, private equity growth and venture capital firm from Central and Eastern Europe with almost 20 years of experience in this particular region, with offices across the region from Vienna to Warsaw, Prague, Budapest, Bucharest. So all the major capitals in the region and with partners across these territories. So I joined them and I'm now the partner for Romania with 3TS Capital Partners. And we started with a small Romanian VC fund that is now fully invested, but also with a larger regional fund for all of CEE, where we still have investment opportunities. With the Romanian fund, we're still doing follow-ons in existing investments. We have a portfolio of some 10 tech companies, tech-enabled companies. And this is how, let's say, I got to be a venture capital professional.
Well, can you tell us more about 3TS Capital and what they look for investing, what sector, what stage, what revenue level that you need to have before an entrepreneur can really engage with 3TS? Can you tell us more there?
Yes, we're private equity fund management company with a number of funds across the region, across Central and Eastern Europe, probably a bit more than 300 million euro under management over time, and about 70, maybe 70 plus companies that we invested in so far. Notably, companies like LogMeIn, for instance, one of the very few unicorns from this particular region, where we invested some Series A back in the days when the company was just a Budapest-based startup, and then the company was listed on the NASDAQ, and now I think it's at 5-6 billion or something like that. Also in Romania, we invested in a company called Avangate. This was recently, a few years back, acquired by Cisco Partners and is one of the important players in the digital payments business globally. Many other companies that we invested in, again, either tech or tech-enabled. In terms of the size, ticket size, we're looking at anywhere between 1 million to 5 million euro, maybe going to 7, 8, 10 million euro in a specific investment case. So it's either VC or growth stage, expansion stage. We're not really into buyouts, so we normally tend to invest next to founders, entrepreneurs, rather than buying companies out from them. We do some cash outs every once in a while, but normally we would invest as a minority shareholder, significant minority shareholder in companies with, let's say, very high growth potential. Again, tech companies or tech-enabled companies in the region. We have invested, for instance, in a number of e-commerces and other IT services or tech services. But bread and butter is, I would say, probably software as a service, which is something that is a very good, let's say, opportunity for the region because it can be sold globally without any barriers or, let's say, challenges in terms of logistics. While, there is a lot of talent, there is a good talent pool in the region for IT professionals, for project management. Wage differentials still exist towards Western Europe or the US. Conversely, we're also investing in some US-based companies with development activities, IT development in particular, going on in Central and Eastern Europe, again, for the obvious reasons of the talent existing here and also the lower cost of developing software and supporting, let's say, global customers from here. So that's really a established part. In a nutshell, again, as I mentioned before, we operate through a number of offices throughout the most important capitals of the region, Vienna, Prague, Bratislava, Budapest, Bucharest, Warsaw. We also invest in the Baltic countries. We have an office in Finland. We have our main, let's say, admin office in Luxembourg because most of our funds are Luxembourg incorporated funds. And we're also looking at countries like Bulgaria, the Western Balkans, Turkey. We have partners or investment managers from those countries. Most of them would be located in Vienna, but operating into those territories, looking for interesting investment projects and doing transactions there.
So you invest in tech-enabled businesses, including SaaS and other technology startups, and you're looking for good growth rates, as most venture capital does. Are there any particular metrics you really look for? Is it cost of customer acquisition to lifetime value or some other metric that really determines who gets a serious engagement from your group versus is probably not going to happen? What can you tell us there?
Well, certainly depending on the business model, we have a few KPIs that we're looking at. In most software as a service businesses, we're looking at a combination of cost of acquisition versus lifetime value. And obviously, lifetime value is a result of the usual recurrent revenues, keeping into consideration the churn that exists in the business. So these would be the most important metrics that we are looking at when considering a software as a service business. Obviously, we're also looking at how the business is growing. So especially for early stage businesses, instead of looking at last year's revenues or 12 trailing month revenues, we are looking at an annual run rate, which is more, let's say, is more of a proper indicator for us because normally these companies that we invest in are still in a fast growth phase, anywhere between 50% to more than 100% year-on-year growth. So in that type of growth, we're looking at, let's say, more like prospective results than to the historical results, even though obviously we need to see some existing revenue traction in those companies, but we're looking more into companies delivering solid prospects in terms of annual run rate based on either last month or last quarter or the last interval that we can determine and then look how this is going to be projected into the next 12 months or so.
Well, there's many new sectors that are coming up that VCs are funding, including artificial intelligence, machine learning, data analytics, also blockchain, and there's many others that are out there. Which of those sectors are you most interested in these days? Which do you think have the most potential for growth?
Well, I think machine learning is something already quite solid. Of course, this, for some people, goes hand in hand with AI. But if we look at our own existing portfolio, companies doing software as a service for, say, digital data acquisition, surveys, form building, counting, or invoicing products, HR, technology, and other companies where we already invested, most of these companies would have marketing automation, obviously. Most of these companies already have a significant activity around machine learning and going into artificial intelligence. So I think that's probably the most important trend. I would also say that it's not necessarily something that we are looking for in a company like core business, but we want to see that whatever software product they're building, it's actually something that will be improved over time by, let's say, self-learning or machine learning type of software development. And for that one, in the existing portfolio companies, we have a specific, let's say, investments into that, taking our products into the next level, let's say. Obviously, fintech is an important area of let's say, technology investments today. And we're also keen on looking at fintech companies. We have a few companies which would be around this area. And again, more into the local champions or regional leaders. We are looking at e-commerces, online travel agencies, companies heavily using technology for providing services to either to customers, to consumers, or to businesses, either B2B or B2C.
What's your take on blockchain and in particular the initial coin offerings that are going on around blockchain? What do you think about those?
Well, coming from this part of Europe with a more, let's say, balanced and moderate risk appetite, maybe than some other investors from the Western Europe or the US, I would say that it's still highly speculative, talking about ICOs in particular. I would say that obviously blockchain as a technology has something to it that could be the next generation of big technology companies and big innovation economically and socially. But so far, I see or I feel that it's been too much leaning towards cryptocurrencies and ICOs, which again, in my opinion, are still highly speculative. It doesn't mean that we would shy away from a blockchain project if something solid, something real, something sustainable came our way. But a lot of the things we have seen so far are more or less speculations around, let's say, the hope of retail investors to make very, very high yields with cryptocurrencies.
Well, in Europe, you have the General Data Protection Act coming up here in another month or so, the GDPR. What innovations are you seeing that drive in Europe or among European startups, as far as being able to protect the data, delete the data, manage the data, what have you? Are you seeing any startups that are taking advantage of the impending GDPR?
To be honest, with respect to GDPR, what I've seen is more of defensive, reactive approach with most companies, because the reality of the matter is that 99.9% of the existing tech companies working with businesses or with consumers have their own housekeeping issues with respect to the new GDPR regulations. And indeed, these would come in force May 25th. So it's just very short time. And a lot of the adjustments companies need to do are major adjustments in terms of basically, for most companies, it would require re-registering all the consumers, all the users for reasons of being compliant with the new GDPR regulations. So that's a huge activity. It already costs companies material amounts of money. The implications or the risks are really dire if you look at penalties relative to the full turnover of the company and percentages of the turnover of the company, annual turnover of the company. So I think at this moment, most of the tech companies are rather trying to deal with a situation than to come up with innovations and use the opportunity that maybe the new regulation is creating. I estimate that we'll see startups doing services in that area, but to be honest, I haven't seen a lot of activity. The first movers in this territory were consultants from, big four companies, from smaller consulting firms, were attorneys, lawyers with some experience in this data protection and other experts in data protection. But they come more from traditional businesses rather than from tech startups or tech companies. So they are proposing more like traditional measures to a traditional type of European Union regulation. I'm really curious and looking forward to see some technology startups solving this problem better and generating maybe opportunities for companies in Europe as a result of that.
Last minute or two we have here, what else should we cover?
Well, maybe just the fact that in terms of 3TS Capital and what we do, we obviously try to help tech companies to get opportunities where bigger opportunities or biggest opportunities are. In some cases, this would be the United States. And this is why we have recently opened an office in the US. So we have a partner there, actually just out of Washington, D.C. So it's East Coast, it's not necessarily Silicon Valley. On that one, as 3TS Capital, we also partner of Draper Venture Network. So we are in contact with a number of VCs and private equity organizations from the US and from around the world. And I think it's actually very interesting to see that lately there's been a lot of syndicated and co-investment type of activities in the region as it is globally. And I think this could be for the benefit of all the parties involved, because nowadays, as 3TS, we co-invest with a number of other funds. We co-invest with business angels in Romania, with other type of investors. And that actually creates a lot of interesting synergies in terms of being able to better help the companies create more value for the companies together with the co-investors, and eventually also together with a perfectly aligned interest generate higher return exits for all the parties involved, not only the investors, but also the original founders or the ESOP holders.
Well, that's very good. So what's the best way for listeners to get in touch with you?
Well, with me personally, it's LinkedIn, I guess. I have a page there, and it's Marius Ghenea. It's my name. And obviously, in terms of the 3TS information, we have the site 3tscapital.com. So that should be easy to type in or to Google.
All right. We'll put those in the show notes so people can get back in touch with you. Want to thank you for taking time to talk today, and hope you can come back soon to talk about more of these topics like blockchain, SaaS, and GDPR, and see how those things evolve. Thank you so much for taking time, and we'll close it there.
Sure, Hal. Anytime. It was a pleasure.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.